Good morning, everyone, and thank you guys so much for joining today. Happy Thursday. The market had a wild reversal overnight. I remember going to bed and the market was not looking too good, and then I wake up this morning and we're in the green by a decent amount, and a lot of stocks had some pretty nice reversals. Tom, I know there's a lot of eyes even on Tesla still from their earnings report yesterday, and even Tesla's like trying a little bit to reverse. It was looking good like a couple minutes ago, but now it's coming back down.
Yeah, it really was. It had a lot of good momentum to the upside. I know that those earnings were fairly good. They reported pretty good deliveries year over year and everything. They did say that chip shortage affected them, but it is nice to see them kind of holding their ground here. They did pop back up above this 925 support to 930 level, and I'm really glad it's holding this morning. And with the way that the overall market's moving, I would not be surprised if maybe at market open Tesla started to go back up on another run here. But I don't know, these earnings are 50-50. A lot of stocks, it's just like a coin flip lately. It's like Josh Allen versus Mahomes in the playoffs. So looking at it, I mean, you just don't know which way it's going to move here at open. But I would really hope that we go back to the upside, especially with the way we recovered up last night. Like you can see whenever the earnings first came out, Tesla took a pretty big dip. And then I'm so glad that they came back.
Well, Tom, like it's down 0.4%. Think about how bad the theta is for like the weekly options on Tesla. Like I'm actually going to take a look because I'm curious, but wow. Okay, Tom. So this is like the worst case scenario with what's happening for Tesla if you played earnings. And this is exactly why I don't play earnings. So the stock is flat, right? The calls for this week are down anywhere from like 30% to like 70% or even more in some cases. The puts are down from anywhere, I guess you could say down anywhere from like 27% to like again like 70 to 80%. So it's like that's the this is like an important lesson why I really don't play earnings, and it's just like the odds are like not in your favor when you play these big releases.
Yeah, they really aren't. And even next week's expiration is all in the red as well. So it's like it's really just not good to play earnings. I know a lot of people like to play it, but we have to keep in mind you might win 1 out of every 10 times, 1 out of every 12 times, or whatever the statistic is. But most of the time, you end up getting stuck with this huge IV crush. Here we go, Mike, that it finally printed with the IV now falling down towards 80%. And last night we were at 88%. So it's pretty insane to see that IV falling off that much. And Tesla honestly is coming down here at open quite a bit, Mike. It fell back below 920 now. And man, it looks like we're having another sell-off, unfortunately.
Uh-oh. We shall see. Yeah, Jay Deep said Tesla options down 65%. That was pretty rough. Tom, so I don't know if you've been watching Netflix too much or not, and when I say Netflix, I mean the stock Netflix, but it's up 6% this morning, but I read a very interesting article saying that Bill Ackman is buying this dip. Bill Ackman runs Pershing Square Capital Management. He's like a pretty big figure in the investing world. But anyways, he's buying 3.1 million shares of Netflix. He's been buying since Friday. And I did the calculations, and that's around $1.1 billion, if my math is correct. So around $1.1 billion, and he's buying the dip. And I'll be honest, like I've been watching Netflix for a potential dip buy, but I'm waiting for that like 325 level. I don't know if we're ever going to touch that or not, but I thought that was interesting.
Yeah, that's pretty crazy to see that he's doing that. I know that guy's made a lot of big investments in the past. He's actually the guy who stars, well, he's not the star, but he's like pretty much who they're talking about in that movie Betting on Zero. If anyone's ever seen that, it's a really good movie, but he's pretty much the main character of that. And they talk about how they were going at some different companies back in the day. But yeah, Bill Ackman's a big name, Mike. That's very interesting to see that he's buying this dip, especially on such a large company like Netflix. And realistically, I think it's a good thing to buy the dip. I know that they, missed their subscribers by quite a bit there, but I still feel like it's a pretty good company. And, these streaming services should do pretty good in the future, no matter what. Like Netflix, Disney, even like ESPN Plus and all that stuff should do pretty good.
Yeah, I agree. Like I'm kind of hoping that Netflix falls a little bit more so I could buy the dip. I'm not gonna pay 380 for it. I'm in like a perfect world. I'd love to see it touch like 325 or something like that. So maybe I'll like sell a put or two, maybe at 325. And if I have to buy shares, I have to buy shares. But I don't know. I mean, we'll see. But I think it's a good signal that he is buying the dip, and hopefully it falls a little bit lower.
Yeah, and I don't think that 350 is necessarily overvalued for Netflix, but keep in mind if they did a reverse split or something, it might look a little bit better, or I mean not a reverse split, just a split in general eventually. But yeah, I mean just looking at Netflix though, Mike, like I get it, like it's 350. Are you worried about it being overvalued buying it at 350, or are you just saying like you could just see it going down more in the shorter term?
So in an ideal world, I would like to buy it at 325, anywhere between like 300 and 325. The problem is I don't know if it's ever going to touch that, but I made a video on on Friday, this most recent Friday, just going over everything with Netflix, their fundamentals, all their ratios, like everything, right? And their growth is clearly slowing, right? But that does not mean that Netflix is bad, right? Like they have a very good subscription-based business. They're in an industry that, even though they're losing a little bit of market share, the industry overall is growing. And then I really like the fact that they are, I guess you can say, integrating like a gaming division or gaming aspect into Netflix. I think that has potential to really help them. But I just, like, when I was looking at all of the ratios and everything like that, it was just like 380 at the time was just, it was a little bit too much for me. So like I'm just kind of like, I would like to have exposure to Netflix, but only if it like hits like my ideal price.
Yeah, because like imagine all the big investors that were loading up on Netflix when it was all the way up here like at 500 or so, So it's pretty crazy to see how much it's fallen below that now. And like it was consolidating there around $500 for like 1, 2, 3, almost like 4 or 5 months there before finally breaking out. And it's just crazy to see how much it dipped below this. And we had that huge gap down too. Like it was just such a bad earnings report. And you're right. I mean, they do have a lot of competition coming in with Disney, and not even just Disney. You have like Paramount Plus now. Seems like almost every channel has their own like subscription service. So they're definitely getting hit with competition. But yeah, I mean, I don't know. I feel like it's a good longer term pickup, but I definitely see what you mean though by getting the shares a little bit lower. And oh, now my thinker swim's frozen. Can you still hear me?
Yep.
Oh, okay,
Thankfully.
okay. I thought it was gonna do that, do some lag again, but yeah, I mean, it's cool to see that Netflix is down this low. I think it'll be a good long-term pickup shortly, but like you said, it would be cool to grab it a little lower. And honestly, Mike, like you said, with $300, that looks like a huge support down there for the longer term.
Yeah, so who knows? It might never touch 325 or 300 again. We'll see, but it's kind of crazy to think, Tom, that anyone who bought Netflix like after April of 2020 is now down on their position. Like literally, like the price right now is at the same price it was back in like April of 2020, right around there. So like anyone who bought Netflix ever since then is down, and just a couple months ago, the stock was at $700 each. So it's been a wild ride for Netflix, but we will see what happens. And then let's see what else we have moving today. So, Tom, I know we have a lot going on in the market. There were a couple big earnings releases. Do you have like any favorite setups or any setups you're watching today?
As far as the earnings, let's go look at that chart really quickly and see what exactly came out today before open. So it looks like we had MasterCard, McDonald's, we have Dow Chemical down there. Southwest Airlines was actually a pretty big one, Mike. I saw a pretty good article by them that said that they should be profitable in 2022, although they did say that Omicron did hurt them in the first or might hurt them in the first quarter here, but they do expect to be overall profitable this year. So I thought that was a pretty good outlook by Southwest Airlines. And, honestly, these airlines have been dipping down over the past few months. Like it might be a pretty good pickup on some of these with this good outlook and good guidance.
Yeah, true. Yeah, I mean the airlines have been all over the place, even with the cruise lines. Like I know Boeing's technically not an airline, but they're in the airline industry or airplane manufacturing industry. We could say that. And even that's been all over the place. Like their earnings were pretty rough over the last quarter, but still, like it's just been all over the place for like the past year or two.
Yeah, it has. Like ever since COVID happened, honestly, the airlines and Boeing and the cruise lines, they haven't really moved back to the upside in the way I think people were hoping. Like we can see Carnival is still kind of just holding down around these lows. Same thing with even Royal Caribbean. And then if we even go into some of the bigger airlines like Delta, you can see they're kind of holding down too. And like we talked about with Southwest, I mean, they're just not moving back up towards those highs. I mean, Southwest did for a month, but I mean, we're almost back down to the lows at this point now. So looking at it, I mean, they have a lot of room to recover, I think, especially in Boeing's sense. And, Boeing unfortunately had all those issues with production and, those crashes a while ago too. So they have a lot of weird issues, but I really hope that the airline industry, like the regular companies start doing better.
Gotcha. Yep. Alrighty. So then, with our first question, we have Jesse saying MasterCard falling after earnings. Thought they were good with the question mark. So yeah, it's down like 2.6%. I skimmed over a couple of articles related to MasterCard, and yeah, they did report some pretty good earnings. I know that their, I guess like according to them, their cross-border volume, it rose by 47% year over year, but it's slowing from its 53% increase in the fourth quarter of 2021, and then the 52% increase in the third quarter of 2021. So overall, their earnings were pretty good. As we can see here, I mean, Tom has everything pulled up, but yeah, I guess it's just like how the market is sometimes. Like sometimes you could report good earnings and the stock still falls.
Yeah, and it seems like lately a lot of people are looking at they're really looking at the guidance for like the next year or so, and I'm really curious to see like how their guidance is. I haven't really read too much into their stuff yet, but looks like they're gonna have a conference call sometimes. They probably just had it, but I'm really looking into to see like what they're talking about for the future, Mike, because as the banks start to, well, I should say as the central bank starts to raise rates like the Feds and everything, I really have a big feeling that it's going to affect these companies like Visa and MasterCard in a pretty big way. And these companies have been getting hit over the past couple of months, and I don't know if it's these companies trying to price in rates or what's happening here, but it is interesting to see these companies taking these pretty big dips here.
Very true. Yeah, I mean Mastercard and Visa have been doing pretty well. Like over the past couple of years, was it amazing? No, but still, like it has been going pretty well. So, it's been consistent, we'll say. But yeah, I mean, it's interesting. I also did not do like a full analysis of their most recent earnings, so I'll take a look at that later. But we will see. And great question, Jesse. And then we have Daniel saying Lucid seems to be at a crucial level. Let's take a look. Yeah, it's down 4%. Looks like we're still above that like $30 support, I guess you can say. It's been very volatile, and it will continue to be very volatile as it is I guess you can say a growth company.
Yeah, I think that's definitely hitting it right, Mike. You're up above $30. It's going to be volatile. Expect it to maybe keep going down in the short term. It's not looking good here. I know that lots of people love Lucid, including myself. I love them as a company. It's just we have to look at this stuff objectively. And, Lucid is starting to fall below this short-term support here, right around $33. Now that we broke that, I could definitely see us coming down towards 30. And to be honest with you, Mike, I could even see Lucid going below 30 here, especially with the way these growth stocks are moving. They're just not moving up in the way people have been wanting. And then at the same time, we're just breaking some of these crucial short-term supports and stuff. So I could see it going lower here in the short term, but I do like them for like the next few years. It's just obviously, they're going to have some production issues maybe to start the year, and we'll have to see how that ends up moving because, their last earnings report, they did pretty decent for a few days, and then they ended up just tumbling right back over because of those production issues.
Yep. Alrighty. And then we have Daniel saying all hell is coming for Netflix. What makes you say that? Like, I know that they I guess you could say had very low guidance in terms of like new subscriber additions, but I don't know. I mean, considering Bill Ackman's dumping over $1 billion into it, and then when you look at their fundamentals, like they are pretty good. I mean, I know they have a cash flow problem, but they're not bad, and they're like a subscription based business, which is good. And I don't know, we'll see. I mean, I'm considering buying the dip if it hits 325, but again, we'll see. And then we have Sam saying Nvidia looks good. Tom, what do you think of Nvidia?
Personally, I think it looks pretty decent for a long-term dip buy, but I would only do that if I was going to start averaging in with shares or if I was going to sell some puts, of course. But, if you can't sell a put because it's $235 a share, then I would definitely just say, it does look good to start averaging into a couple shares here, but I don't think I would go all in yet, Mike. It does look like it has a good chance to maybe start to recover off of this low down here. But I will say though, the tech market is just in a bad spot. We've seen Netflix take these huge dips. AMD's been dipping, Nvidia's been dipping, and they could go a little bit lower here, especially with the way I think we saw tech stocks move yesterday whenever Powell spoke. Like right after he started speaking, a lot of the big tech companies really sold off. Now I know that they recovered back, but I just really feel like that Nvidia and AMD, they might linger around these lows for a little while. Like I don't just see them just exploding right back up to all-time highs anytime soon, especially with the prospect of still raising rates in March and over the next few months alone.
I agree with you for sure. Yeah, and then like you said, I think they have earnings coming up very soon. What's the exact date on them?
It looks like February 1st for AMD, and then for Nvidia, it looks like we're gonna have to wait a little bit longer out to February 16th. But it looks like AMD will be the first one, and with all these production issues and stuff, I mean, who knows? Maybe AMD will take a bit of a tumble if they report that these chip shortages and stuff have been causing them to lose out on some revenue here.
Gotcha. Alrighty. And then we have Aloha saying Baba at 111. Uh-oh. Let's take a look. Yeah, Baba's at 111 and it's falling like 1.5% today. It's been looking rough, I mean, they're on a fundamental level. They've been doing pretty good. Charlie Munger has been really buying the dip, and he's been like doubling down on his position. So that's huge. I mean, it's been rough for these China stocks, and all of the recent global news definitely has not been helping them. But as long as China is not lying about their data, Baba is a money printer, just fundamentally. So we'll see. It's at a good level, but then again, there's a lot more that affects this company rather than fundamentals. And an example would be like if we had like really bad relations between the U.S. and China, or more tariffs, or anything like that, it can really hurt this company.
Yeah, and I actually saw some pretty bad China news come out yesterday that a lot of people might not have heard of, but China actually warned the U.S. over Russia's legitimate security concerns, and apparently, like, China is somewhat picking sides here and going with Russia, of course, maybe because they're all communist. But in the end, though, China and Russia are generally pretty good friends, or I should say they're kind of neutral with each other. They're just kind of indifferent. And they both kind of don't like us. So looking at that, it's not good. And obviously that's not good for the China stocks if they start interfering with this Ukraine stuff.
True. Alrighty. And then we have Sean saying such a volatile market this week, having a hard time figuring out a trade on tech stocks. Yeah, it's very hard to do that right now. Very, very hard to do that. Take the time to buy the dip for longer term plays. There's a lot of them out there. I mean, there's definitely a lot of deals out there. Just check out your favorite stocks, and odds are they're at a pretty good level. So, in times when it's very hard to predict direction, don't feel the need to, just like be very selective, and it should work well over the long term, and shares are a great thing to have. And even if you start a long-term portfolio and it's very small in the beginning, that's okay. Compounding is a magical thing, and especially starting earlier rather than later. So that's awesome, Tom. And speaking of longer term plays, we have good old DraftKings up today, Tom. 3.5%. I'll take it.
Yeah, I'll take it too. It looks pretty good. If we can end up getting a nice run here and maybe break that pre-market high of like 21.30, I'll really be liking DraftKings today. And I wonder if Zoom and the rest are starting to pop back up too. And yeah, Zoom, it's not up as much as DraftKings, but at least it's in the green, and it's getting some green candles on the 5-minute chart. So that's always good, but it is good to see DraftKings up 3% again. Mike, DraftKings was having a huge move yesterday, and they actually got upgraded by a few banks. I know Powell came in and kind of ruined the situation for us, but I'm really glad to see them going back up. And like I said yesterday, I think that these larger institutions starting to upgrade them is going to give investors a lot of confidence to start buying this company down here. Now, is DraftKings going to go straight up? Probably not, but still though, I think it's a good thing. And we can see actually on the daily chart, Mike, there was actually a lot of volume that came in yesterday, actually way more than I was expecting to see.
That was crazy. Like, I didn't even notice that until you pointed it out. Like, that's a lot, Tom. That's a lot.
Yeah, we had another big day like that back, it looks like on like June 15th, and we had a huge green day that day. And it's too bad Powell spoke yesterday, because who knows how high DraftKings could have got.
And I'm very curious, like, with the volume, like, of course, most of it is naturally algorithms and trade and, high frequency trading systems and things like that. But that's like that for like all companies nowadays. But what I'm curious is why did we see such large volume on yesterday rather than any other day? And was that volume some of the shorts covering? Was it institutions buying the dip? Was it shares that are a part of a larger trade, like that are connected to the options market? We don't know. It's just like something to think about, like in the background.
Yeah, and you can kind of see how like the volume started almost picking up later in the day, like after Powell spoke. So that does worry me a little bit. Like maybe there was some selling going on, but hopefully that was just people buying up the dip. But you're right, a lot of that is just obviously algorithms and stuff like that nowadays. So that does kind of dampen the volume metrics, I should say, because that does throw a pretty big wrench into some of these statistics now with how the computers are really controlling everything.
Yep. Yeah, Flash Boys. It's a great book. So if you're into reading, definitely check out the book called Flash Boys. It talks all about, like, I guess you can say high frequency trading systems and even like how like the payment for order flow system works. With all brokers nowadays, your order does not get sent to the actual exchange. So I mean, that's just how it is nowadays. Like Robinhood, of course, they kind of pioneered the commission-free trading industry, but you're still paying a fee. It's just on the back end, and you don't even know it. So, for example, with Robinhood, like while all other brokers would charge you like $7 to place a buy order and $7 to place a sell order, Robinhood was free, but Robinhood had worse fills. Like, let's say you wanted to buy an option that costs $200, instead of, like, let's say the market price is like actually 200, you might have to pay like 210 for it or 215. And then if you wanted to sell it, you might only get 190 or 185 or something like that. But yeah, it's a very interesting book, so I would definitely check it out. And speaking of Robinhood and payment for order flow, Tom, we have Robinhood earnings after the bell today. I think they should be very interesting.
Yeah, it's definitely going to be a big one to watch. I know we've been talking about it a ton the past few days, and it's been a pretty hyped up subject. And I really feel like that Robinhood, they might start to get that type of volume that we're waiting for. Like they've been obviously ever since AMC and GameStop have slowed down. The overall volume of the market has also slowed down, especially in the options and crypto world. So I'm really hoping that they start to see some increased volatility there, Mike. And I just, like I said earlier in the week, I just can't believe they're at $11 now. Like, even if we come back up and retest, $40, that's not even close to their all-time high. I mean, that's almost like a 400% increase there. Like, it's kind of crazy to even say that. So I think it's a pretty good pickup down here. I'm not saying I would just go ahead and just buy a whole bunch of call options right before these earnings, but I would say if you want to start averaging into shares, it might not be a bad gamble here. I know you're getting it right before the earnings, but keep in mind if this volume picks up, I mean, Robinhood might have a pretty big pop if it does go well for them.
Yeah, like I'm split on it. Like I've really been eyeing it up. Like they have growth potential, as we know. It's just like I'm gonna wait until after the earnings report just to get a little bit more clarity. Like they're in a very lucrative business, but then again, like there's also some, I guess you can say, scrutiny with the payment for order flow business models. Like that can definitely hurt Robinhood considering so much of their revenue comes from that. And then another thing Another thing is, what was I going to say? Oh yeah, like they also have like a lot more competition growing. I don't know if you've noticed this, Tom, but like I feel like nowadays there's so many more brokers compared to what we had, let's say, 2 years ago. Like I feel like whenever I watch like YouTube videos or whatever, like I'm getting ads for Moo Moo, or like obviously Weeble is big, but like there's a lot of like other ones that are like starting up that are at the end of the day they're competition for Robinhood, and Robinhood has not had the best press over the past couple years, and like they kind of screwed over a lot of their most loyal customers. So it's like I'm definitely concerned in that sense for a potential Robinhood play, but I guess we'll see what their earnings say.
Yeah, you're definitely right. They have a ton of competition, and one that I kind of forgot about was even like Ally Invest. I kind of forgot about them, and we don't even think about some of these smaller companies out there. Like obviously, Merrill's not small, but a lot of these companies on this list here are pretty big, obviously. But then there's like some of these newer companies like SoFi, for example. Like a lot of
Yeah.
those companies you're able to buy shares on now, and even like Cash App and stuff like that. So it's pretty crazy to see how many brokers there really are, or just how many different ways you can buy shares nowadays. Even with like the fractional shares, it's kind of crazy how you can buy a $300 share for $3 if that's all you have. So it's kind of interesting. But looking at it, I really hope they do better, Mike. And yeah, I mean it's a touchy subject. Lots of traders don't like them because of the stuff that happened whenever they had to stop orders for AMC and GameStop at the time because of all that crazy volume going on. But keep in mind they were kind of forced to do that, and their CEO talks about that a little bit. But I definitely see what you mean, Mike. Like a lot of retail traders honestly don't like Robinhood, and I know like initially when they IPO'd, they had a lot of hate. Like I know they ran up for those first few days, but I remember so many traders were like, I hope they go bankrupt and I'm going to short them because of what they did to us with AMC and all that type of stuff. And it's just interesting to hear how many people didn't like them. I honestly thought they were more popular than that.
Yeah. And another interesting thing is, you're right, like it had so much bad sentiment, but it's kind of funny because those same people that were hating on them so much, like a lot of them still use Robinhood. Like if you look at Wall Street Bets as an example, and you look at like all of the trading posts, like a lot of them are still using Robinhood, even though a couple months ago they said that they were all going to leave Robinhood and whatever. So like part of it's like, yeah, like it has bad sentiment, but if they're still, like if Robinhood's still making money and growing their revenue, then maybe there is an opportunity. Like I'm very mixed on this play, because another thing is there's a lot of innovation going on in like the financial services industry, in the sense, like especially in like the cryptocurrency sense. Like I know Robinhood was good in how they adapted to like offer cryptocurrencies relatively early, but they also like are lacking some features which I know they plan on adding to their platform, like transferring cryptocurrencies for like with wallets and stuff like that. I know they have like that in the works already, but I'm just curious, because there's just a lot more competition nowadays, and I don't know. We'll see. I mean, it's not like the valuation's cheap. Right now, it's at like 10.2 billion, which is a lot, but I guess it's, if you compare it to their competitors, it's not too much. But we'll see. I mean, they're still not yeah. I mean, I guess yeah. So I don't know. We'll see. We'll get more information once they report earnings.
Yeah, we definitely will, and we'll definitely have our eyes on this one for tonight, and we'll put a lot of information in tonight's YouTube video about this one, as long as the earnings come out at a decent time. But yeah, I mean, I think it'll be very interesting, Mike, and personally, I think that they might end up going up. Like if we end up breaking out above 1350, I think they could get a pretty big move, and as far as a technical level, that would be a pretty big resistance that I'm going to be looking out for today. I'm even going to draw that on the chart just so we can kind of look at it. But Mike, like looking at some of these other stocks moving today, we actually have quite a bit climbing up my watch list here. And some of them are some of these social media companies. Like we can see Snapchat is up 4.6%. We have Twitter going up 3.2%. It's honestly a pretty good turnaround day for these companies too.
Very true. Alrighty. Yeah, that's awesome. And then we have Jay Deep saying had to pick up some Tesla puts to cover the 80% loss from the call swing. That's not good. Yeah, Tesla earnings are always very risky, and it looks like Tesla's falling now, so that should help you out. So that's good to see there. Daniel said, joking about Netflix, I remember Ackman saying all hell is coming for real estate. Actually, I like Netflix for the very long term. Kathy says Starlink will expand internet access to the whole world. And she also added Netflix to her ARK Space ETF. Yeah, I mean, we'll see. I also like Netflix for the long term, just hoping it dips down a little bit. And Tom, I know she mentioned ARK, so how are these ARK funds doing?
Yeah, it looks like the ARK Innovation ETF is not doing too hot today. It is up 1.5%, but ever since market open, it just took a little bit of a tumble. I guess it's up 1.3% from that awful crash yesterday before close, but yeah, I mean, it looks pretty good. I know that the Genomics stock is not looking too bad either. What's the space ticker?
Dang, I forgot. Is it like?
Yeah, hang on. I'm actually looking it up as I asked that. It's ARKX, it looks like.
Okay.
So let's see, ARKX. Yeah, it's not looking too good. I mean, it's up 0.13%. I think that this will be a really good one to pick up for the longer term, but one thing to keep in mind is just that space is a very weird sector. You know, like we have to keep in mind that there hasn't really been too much going on yet with space, and it's going to take a long time before a lot of these companies actually materialize. Like I know SPCE might do okay if they start getting a ton of if they start having a ton of tourists and stuff like that going on their flights. But as far as like some of these other companies like Rocket Lab, like companies that make rockets, they're just not looking too good here in the short term. I know there's a few other space stocks as well, and they've all been kind of dipping off. So it's just not good for the short term. But I do feel like, Mike, like over the next 5 to 10 years, some of these stocks will do a lot better. It's just that in the short term, obviously, we're so focused here on Earth, and obviously like Elon's been launching different missiles and stuff like that. But that's with SpaceX, and a lot of these companies aren't even public. So that's where a lot of these problems come in. Once we see these companies go public, I think they'll get a lot more hype.
And there's a lot of regulation still. It's kind of like the marijuana industry. Like some of these MJ companies are so, I don't even know how to describe it. Like some of like the regulations and taxes are so bad where it makes it extremely, extremely, extremely hard for them to be profitable. And yeah, so I feel like the space industry has some similarities to like the MJ industry, especially when it comes to like regulations and things like that.
Yeah, it really does. And because you can't just go, you obviously just can't start sending rockets up into the atmosphere anytime you want to for tests and stuff. So it definitely, you have to schedule a whole bunch of stuff. You have to hope the weather works out. You have to get all these approvals. And, Elon Musk has talked about some of this stuff over the past like couple of years with SpaceX. But either way, though, I really like the companies for the long term. And Mike, I'm really personally, I know I've told you this probably in private, but I'm really waiting for some space mining companies. Like once we finally get to like the moon, for example, I feel like that we're gonna be able to mine and get like, for example, oil, gold, silver, maybe uranium, whatever's out there. Like there's gonna be a lot of materials on these different things, and that's honestly what I'm waiting for. But keep in mind, all these space companies are probably 5 to 10 years down the road at this point.
Yeah, minimum. So
yeah, minimum.
We'll see. Good stuff there. We have J Deep saying, why is coin going down so low? Would it be good to pick up some shares of it? So Coinbase, it's down 2% today. It's right above that like 162 support. Let's see. Let me take a look at it really quickly. Yeah, it's taken a pretty big hit from the past couple of months and ever since it IPO'd. So let me just take a look at their fundamentals really quickly. So Coinbase, obviously, it's in a very, very explosive industry. It's growing at a crazy rate. The cryptocurrency industry is. Coinbase also has a lot of competition, but they are one of the leaders in their industry, which is good to see. In 2020, they had some amazing cash flow numbers, but the concern is with cryptocurrency kind of selling off over like the past couple of quarters. That has hurt their quarterly revenue, and even if we look at their most recent earnings report, which was before the major drop that we saw with Bitcoin and Ethereum, their earnings or I mean their revenue already dropped by quite a bit. So it has growth potential. I need to look more like into their fundamentals to get a good judgment of them. But I do like to see the revenue growing the way it is. The cash flow, free cash flow, and operating cash flow is in the positive by a great amount. That's awesome to see. Their revenue in 2021 was pretty good so far, but I'm curious how that ends up being with the next earnings report that's quarterly. One concern is that they're trading at a price to sales ratio of like 6.5, which it's not horrible. It's just there has to be a lot of growth to back it up. And so far there has been a lot of growth. And then their market cap is at like 46 billion. So I don't know. I mean, on a technical level it's good. On a fundamental level, it's not bad. It's just they need growth to back up their valuation. That's not a bad thing, and a lot of companies are like that.
Yeah, a lot are, like, especially right now, we're seeing lots of these growth companies down very low. And, one thing that kind of that really makes me think of Coinbase, Mike, is Robinhood. Like Robinhood, they need that increased trading volatility. And I feel like that Coinbase, if they would have gotten, like, for example, increased trading volatility out of the crypto sector, it might be doing a little bit better right now. But, one thought is that with crypto down right now, kind of like what we're talking about with Robinhood, it might increase some volume here. And if we do see a lot of buyers start rushing into some of these cryptos at low prices, it might help Coinbase over the next, 3 months or so. And I really can't wait to see how their next earnings report is. Honestly, I think it might be pretty good. I know that they're, it's going to, like, they're going to report in like a month or two, but I still feel like, though, that they might see an increase in trading volatility here, kind of like what we talked about with Robinhood. And I feel like that might help them.
Yeah, I hope we definitely see that. And like the same thing goes for Robinhood. So Tom, this is actually a decent point. Like, I wonder, like, if we see Robinhood report like amazing, I guess you can say, trading activity numbers today, right? I would assume that Coinbase would be affected by that. You know what I mean? Because if Robinhood users are really trading crypto in a big way, you would think that it would be at least somewhat similar for Coinbase users.
Yeah, and I would think personally that we might see a bit of a sympathy move out of it, kind of like what we see with AMD and Nvidia and with other companies like that. So kind of like what we saw with Netflix and Disney. Disney took a pretty big tumble whenever Netflix reported their earnings. Like we can see Disney was down quite a bit as well. We can go back and look at Netflix here, see how they tumbled off too. So yeah, I think it could definitely move in sympathy, and that's a really good point. Like whenever Robinhood reports, if they report pretty good, it might be a good time to start shorting puts for Coin. And I know Hunter's been calling out some premium selling plays on Coin, I think, over the past couple days.
Yeah, exactly. Yeah, I'm with you for sure, and I kind of feel the same way with Robinhood, but I just want to see how that report ends up being. So we will see, Tom, but looking at some of the movers today, the market's doing pretty well. It's up 1.6%. The SPY is up 1.6%. Like I said, we're having a pretty good day so far. Some notable movers. We'll start off with the bad ones, which we have Lucid to the downside. They're down like almost 9%, Tom. It looks like they're getting pretty close to testing that $30 support.
Yeah, whenever I said they would, whenever we talked about $30 earlier, Mike, I was not thinking that they'd hit that today. But wow, I mean, they're down 8%. Definitely not looking good here in the short term for them. Yeah, definitely not good. I know they're down. I know Intel's down 6% on their bad earnings report. Looks like Intel might be kind of tumbling over, kind of like what we saw with that setup, kind of like what I pointed out before, Mike. Like they might take a bit of a tumble before finally retesting support and then coming back up. And it's such a crazy setup on some of these stocks that are down. And then we even have the big player, Tesla, down 5%. It just continued to go lower here ever since market open, Mike. We're actually retesting this 880 support. And if we break below that and then we finally fall below 850, I'll tell you what, Tesla's not going to be looking good. And I talked about yesterday, Mike, that Tesla almost looked like it was doing a dead cat bounce to me. And I'll tell you what, it's setting up now almost like a for sure dead cat bounce. So if we see some big supports break like 850, unfortunately, I'll be pretty bearish for Tesla, at least for those first couple of days.
Yeah, we'll see. So far, on like a positive note, Tom, we have DraftKings in the green by 5%. Let's go. DraftKings is looking good. Netflix isn't looking bad. That's it's trending up slightly. Teladoc and Disney's even moving up. So, Tom, so far it's a pretty good day. I'll say that. The market had an amazing reversal from overnight lows. It's always good to see the growth stocks in the green. Most stocks on my watch list are in the green today. That's awesome. What setups are you seeing?
I'm really looking at EA today. They're looking pretty good. They're up 2.8%. It's not looking bad. I know you mentioned Netflix, and they're kind of sitting right at a big resistance right now. So I'm kind of waiting for Netflix to maybe see if they can break out here up above 390. If they can, I think we might have a pretty safe move up towards $400. So I'm really going to be looking for a nice breakout right here. But I really like a lot of these gaming stocks, Mike. Like, for example, EA is having a pretty big boost to the upside today. I think that's pretty good, especially considering how they were tumbling down yesterday. I know lots of stocks are recovering, but this one looks like it has some pretty explosive movement today. I really like this. And then, Mike, I've also been eyeing up these oil plays still. Like, look at Oxy. It just continues to run up and make new highs. It's up to almost $39 today. If we look at them on the 1-year daily chart, they are starting to really break out. They just broke out above $35, and they're starting to really run. And man, crude oil just keeps going up. We're up to $88 a barrel. We just broke the highs of like the past year or so. So it's pretty crazy to see how crude's running. And I'll be honest, analysts have been saying we might be around $100 a barrel pretty soon. And we might be. And if we see that, expect these companies like Oxy, Exxon Mobil, and Chevron to just keep moving up. They just keep breaking highs here. It's kind of crazy.
Yeah, it is. They just keep going, Tom. Like, They I can't even describe them in any other way besides that. It's just they keep on going, and who would have expected this out of oil companies? Like, I guess you could have expected it with oil futures moving the way they are, but yeah, Exxon's really running, and a lot of other ones are too. So keep them on your radar. And Tom, it looks like Exxon actually reports earnings pretty soon. So
yeah, they do. I think it's is it this Friday? No, it looks like it's February 1st, but hang on. I think there is one that does report Friday. Okay, it's Chevron. So CVX reports Friday, and that'll give us a pretty good insight into these oil companies.
Yeah, there we go. Alrighty. Well, Tom, do you have any last minute plays before we wrap up the stream?
Man, I will say today was a pretty good day overall. I'm really happy to see the market come up like this. There was some good GDP news that really initially made the market pop up, which was great, especially considering everything that happened yesterday with Powell. And, it looks like Powell's going to be a little bit more hawkish lately, Mike. I know he was dovish for a long time, and pretty much if he's dovish, it means that he's bullish on the market, and he pretty much wants to keep the Fed's easier policies in place. If he's hawkish, it means that he's pretty much looking at raising rates and, maybe tapering bond purchases like they're talking about and stuff like that. And it looks like he is now hawkish. And like we talked about, Mike, he finally got secured to his second term. And ever since that happened, it seems like he's really changed his tone as far as inflation and everything. And the market did not like that. But I will say the recovery today was very nice. I'm really happy to see a lot of stocks in the green, especially good old DraftKings. And I'm really happy to see even stocks like Twitter starting to recover. I feel like that some of these beaten down companies like Twitter, Snapchat, and stocks like that are just around such key levels. It's going to be pretty good, I think, to pick them up for the long term. Now, is Twitter my favorite company in the world? No, but I feel like that, given how long they've been around and everything, I don't think they're going to go anywhere. Same thing with Snapchat, and also just a lot of these other companies that are beaten down that I think will be really good to start buying. And I point Twitter out because they're up 4.3%. They're starting to really move off that support.
There we go. Well, thank you all so much for joining. I just want to personally thank everyone before we close the stream. So thank you so much, Jesse, George, Hunter, I'm Fierce, Vicky, Bill, J Deep, Daniel, Sam, Aloha, Sean, Hunter, and I think that's everyone. So thank you guys so much for joining. We really appreciate all of you for joining and asking questions. We have a great time doing this. So hopefully the market continues moving the way it is. Netflix is showing some great price action right now. So thank you guys so much for joining, and have an amazing rest of your day.